Hey everybody, welcome back to Pathways to Wealth. In this interview, we're talking to Jefferson Lilly, who is actively building a real estate empire with something that we've talked about before, which is mobile home parks. Now, for anybody that has heard our previous interview with John Fedro, my good friend and mobile home investor, you already know why I like mobile homes as an investment, but Jefferson is doing it on a really big scale. He has a fund and he's buying up about $5 million a year worth of mobile home parks, and he's getting over a 20% cash on cash return. Really, really cool stuff. And in this interview, he just adds so much value. He talks about how new investors can get started investing in mobile home parks, meaning buying the entire park and basically owning a parking lot that pays you incredible returns. He also talks about why investors overlook mobile homes and the specific criteria that make mobile home park investing so solid. And, again, I don't care if you're an entrepreneur, a trader, or an investor, you need to hear this interview because a lot of the concepts and the terminology and his thought process you can apply to different areas of your life. So without further ado, Jefferson Lilly. All right. Hey, everybody. Welcome back to Pathways to Wealth. In this episode, I'm really excited because we're focusing on an industry that I'm really excited about, which is real estate, and in particular, mobile homes. The return on your investment that you can get in mobile homes is really incredible, and it's often an overlooked segment of the real estate market. So today we have Jefferson Lilly, who is a mobile home investment expert. He's spent a decade prior to investing working with venture-backed startups in a sales management role. And Jefferson, I'll pass it over to you. What else should everybody know about you?
Well, I'm a new dad and have got 2 kids under 2 at home now, and so I'm trying to balance real estate as well as diaper changing. There you go.
Nice. And so you're from San Francisco?
Yeah, exactly. Well, Denver originally, 3rd generation Coloradoan, but yeah, I've been out in San Francisco about 18 years now since business school. And as you mentioned, kind of rode the dot-com bubble up, down, and sideways, and transitioned part by plan and part by luck, transitioned into mobile home parks about 8 years ago. So I was selling basically mobile messaging software. So as I say, I've transitioned from mobile phones to mobile homes.
And where do you buy most of your parks?
We like to buy in the Midwest. We really like cash flow. And, Chris, as I'm sure the coasts tend to be, for any kind of real estate, tend to be much more pricey. Sort of average mobile home parks in California might easily be a 6 cap. And we're buying, comparable parks in the Midwest for 9 or 10. Nice. So we're just all about cash flow. So we're paying maybe not quite half for our cash flow. What we'd otherwise have to pay in a sexy market like California or Oregon or Massachusetts, New York, what have you.
Nice. Yeah. Somebody was telling me a story recently that there was a mobile home park somewhere in California that ended up, like, this was before the housing crash. They subdivided out the lots and were selling them for like $1 million each. Ooh. It was like some kind of ridiculous view, but I mean, mobile home lots for $1 million. I was like, that's insane.
Yeah, that was almost certainly either in Silicon Valley or more likely maybe Southern California and on or near the beach. I don't know exactly that one. I do know one of the big Wall Street buyout firms, I think it was Carlyle, just bought a mobile home park right in Silicon Valley. I believe it was Sunnyvale for about $180 million. And that worked out to be about, I think, $250,000 per pad.
Wow.
So, those aren't the kind of parks we buy. I just don't see the return paying that kind of price. I just much rather own in the Midwest. Money's green, right? I live in California. I can earn it in the Midwest, spend it in California, works just as well here. Doesn't matter where it comes from.
So Jefferson, why mobile homes? Why not go and build single family homes? What's attractive about mobile home parks in particular?
Right. So we're talking mobile home parks, not so much the mobile homes. So, pretty much every other kind of real estate, every other kind of real estate, they're still building more of it. Right? They're building more single family homes, more apartments, more self-storage, more office, more retail, more of everything except mobile home parks. Pretty much every city and county over the last maybe 25 years or so has basically made it against zoning. I won't say illegal, but they've made it against zoning to build anymore. Yeah. So this niche has an undeserved reputation, and that is, most people think, oh, guns, drugs, prostitution, like I don't know which one of those three went through your mind first, Chris, when you heard you were going to be doing a podcast about mobile home parks. Maybe the bottom 1% or 2% of parks are that bad. The other 98, 99% of parks are just fine. They're perfectly safe. They are not full of a bad element. They're full of hardworking folks. Anyway, so they, but because they have a bad reputation, most cities and counties don't allow them. So that makes for a particularly interesting dynamic because the demand curve still grows about 1% a year with population. This is not a shrinking or dying business. It's just that supply is shrinking. So again, it's basically fixed, and then it actually does shrink because we guesstimate about 1% of all mobile home parks get redeveloped every year. They get torn down and turned into a sexy condo development or shopping mall or what have you. So those folks that usually own their own houses, those folks in those mobile home parks that are closing, they have to move their houses somewhere. Well, that goes into the parks that still survive. And then so that's a very positive dynamic there. Plus, again, there's just demand growth of about 1% right along with the population. Okay. So that supply demand curve imbalance means that rental rates do tend to go up faster than inflation. Anyway, that's just a tremendous tailwind to have. Another thing that makes this a particularly attractive business is simply that, as I alluded earlier, we typically don't own the mobile homes. We just own the land underneath. So we have dramatically reduced maintenance costs. For anybody who's actually in real estate, just think through how much of your repair and maintenance budget went to those proverbial leaky toilets and leaky roofs versus what went into the land. Right? Cutting grass, doing sewer unstops, maybe every decade or more, repaving roads or parking lots. Not a lot of your maintenance budget goes into the land.
So you're not fixing
that's all we own.
Toilets and leaking roofs and stuff like that. You're just
sometimes when we get a house, that's maybe abandoned, we will fix it up. We'll put good money into a house to fix those leaky toilets and leaky roofs once. And then we put those houses out on a rent to own agreement. So we look to build communities of owners, folks with pride of ownership, folks that step up out of, say, a rental apartment building and, again, want to become an owner. And Chris, when you give folks a shot at home ownership, they treat their four walls better. So that same tenant that might not have been a great apartment tenant, because again, they had no pride of ownership, no shot at home ownership, you move them into a mobile home park and you say, hey, like in our parks, most of our homes folks are going to own in 4 years, maybe 5. There's no 30-year mortgage in our business. Folks can see the light at the end of the tunnel in a single digit number of years. So again, you take that same tenant, you give them a shot at home ownership 4 or 5 years down the road, all of a sudden they take better care of their house, they maintain it. It's a win for them because 4 or 5 years down the road, they only pay the lot rent, which might only be $200 or $300 versus again, what they were living in was probably a smaller apartment for about $850 in most of our markets. Anyway, so it's a win-win for everybody. Tenants get to own something and reduce their cost of living from $800 or $900 down to $200 to $300. We get, again, a more responsible tenant that shows pride of ownership, and we get to run a parking lot which is pretty relatively easy to do. I'd certainly rather run a 100-space mobile home park than a 100-unit apartment building.
Nice.
Yeah.
So let's talk about the economics of a typical deal. How many units are in a park, or I guess you call them slabs?
No, we tend to call them either pads or spaces. Now, there are concrete slabs on most parks, most individual pads. I don't know why. I guess the original thought was you could place a deck on it or something. Anyway, but yeah, most parks I would say would be probably on average, it would probably be about a 40 space park is probably the average. Here at Park Street Partners, we're buying parks that probably average right around 60 or 70 pads per park. We've got a couple that are over 100. We've got one as small as 20. So that would be a good range. Well, that's our range. There are parks that are just a couple of spaces or 5 spaces. So folks with very little money can get started pretty cheap in this business if they want. Anyway, again, we range from 20 to a little over 100.
Okay. And how do you find these deals? Are they on the MLS? Are you doing marketing? Are you going directly to the sellers?
Yeah, we do a little bit of everything. There isn't any single panacea in this business. So we do direct marketing to park owners. We also market to brokers. We let them know that we're not a broker, that their commission is fully protected. And we, in particular, ask for pocket listings for deals that have not yet been shopped. Because, again, once a broker lists a deal publicly, if somebody who's a buyer with a buyer's broker, makes an offer on that deal, then the commission has to get split in half. So we make it clear to brokers that they get to keep their entire commission, whatever they might show us. So we've bought, again, some pocket listings. We have bought properties that have been more widely listed on sites like LoopNet and some others. Anyway, so it's been a broad range of things. Oh, we've also got some folks now that are bird dogging. We've got a couple of partnership deals. So we've worked with folks to help them learn the business. And so again, so far, a couple of deals have been found by some of these bird dogs. They'll put up some of the capital. We'll put up some of the capital. And then again, we operate it jointly. So we're open for business, whatever works.
What's a typical purchase price or price per lot, and how are you financing that?
Yeah, typical price per lot would be, let's just call it 20,000. So for, say, a 70 space park, that's about $1.4 million purchase price. Very ballpark financing would be that you could borrow 75% loan to value at about a 5% interest rate, fixed for 5 years. That's the way the market price is today.
Cool. And are you going through banks to do that, or?
We mostly have. We think one of our upcoming deals will be able to tap the CMBS market. As deals are larger, they appeal to the CMBS market and or to conduit. So we hope to tap some more creative debt, if you will. But so far, yeah, about 85% of our deals so far have been financed with bank debt. That's something my partner and I are signing personally on. And then we've got about 15% of our deals that have been financed with seller carry. And that's typically not personal recourse.
Okay, got you. So you're either doing seller financing where the existing owner is financing that to you, or you're going through a traditional mortgage bank, and then now you're looking at mortgage-backed securities, something that can get a little more creative.
Yeah, exactly. Non-recourse, longer term, and lower interest rate. Mm-hmm. But it can take longer to get that put together, and it can be more expensive up front. So there are pros and cons. There are a bunch of ways to finance mobile home parks, to be sure.
Absolutely. And are you guys raising capital for the down payment?
We are, yeah. So we've evolved. I got started in this business purchasing my first 2 parks entirely with my own capital. And then my partner and I, Brad Johnson, we formed the Park Street Partners partnership. So we did, in 2014, we did 4 deals, deal by deal. And then this past year, 2015, we raised our first fund. And so we think we're going to stick with the fund model and raise a fund every year. So we should be opening up our 2016 fund in another couple of months. But we raised $5 million in our most recent fund, so we'll be buying about $20 million worth of property with it.
Nice. So what would that look like for an investor? Say somebody was like, okay, well, I'm interested. I want to invest in mobile home parks with you guys.
Right.
What are the economics and what's the process of that?
Yeah. So our fund is a 506 Reg D fund, which means it's registered with the SEC. We can talk about it widely, as I'm doing here on your fine podcast. But in exchange for advertising widely, we are limited to only taking accredited investors. So that's folks with a $1 million and up net worth, exclusive of their primary residence, or folks that have a $200,000 a year income or $300,000 if married. So any of your listeners that are accredited, we'd love to have a conversation with them. Our fund pays out an 8% preferred rate of return, and then any additional profits are split 50-50. Our first deal that we raise money for on a deal-by-deal basis, it's our most mature deal, is grossing about 24% cash on cash. So our investors, again, get the first 8. We then split the remaining 16 evenly. So our investors get about another 8 on that deal. So they're getting about 16% a year cash. Plus, we think appreciation has been about another 10%. So they're earning somewhere in the mid-20s on what we think is a very safe, below average risk niche. So we think that's pretty good.
I want to pause right there and just kind of talk about how powerful that is, because a lot of people, when they think of mobile homes, like you said, and I know about this space because my good friend John Fedro has been doing this on like an individual deal by deal basis for several years, but you guys are operating at a larger scale. And what I love about it is it's an overlooked niche. A lot of people think, no, I don't want to invest in mobile homes. But like you said, you're investing in basically a parking lot that gets an incredible return, and it's backed by real estate. It's not going anywhere. Right. It's not some tech, a tech startup that could become, irrelevant tomorrow.
Yeah, exactly. Yeah, very little. Yeah, there's no Google of this business. There's no 800-pound gorilla that's innovating. There's no OPEC of mobile home parks that sets pricing. It's a very fragmented business. There are 3 publicly traded REITs. The largest run by Sam Zell, billionaire real estate developer out of Chicago. But he and the other 2 REITs collectively own, I think, about 1.5% of all mobile home parks. So again, 98% of all parks are mom and pop, or perhaps owned by folks that own a handful. But I still think it's well over half are true mom and pop, just, a mom and pop that only own that one park. So it's a very fragmented business. And if you're willing to work and scratch around for deals, you can probably find pretty good deals.
Nice. So what's been the biggest challenge in this business? Is it finding the deals? Is it making them cash flow? What's kind of the biggest thing that keeps you up at night, or the biggest challenge to getting to profitability?
Yeah. So most all of our deals are profitable right from the get-go. Again, buying with the 75% leverage. Again, we get into parks typically at a 9 or 10 cap rate. You just do the math there. We're starting off, if we do nothing, we're starting off at about a 16% cash on cash. And again, through then fixing up, say, some abandoned houses, or buying and bringing in additional homes and getting those fixed up for families. We can get the cash on cash well into the 20-something% rate of return. But we've spent a lot of time, frankly, fundraising. A lot of people turn their nose up at this business. It's not a sexy business. It's not the sort of thing that most investors hear about either at a RIA meeting or just chat about, over cocktails. There's plenty of chit chat about people buying apartment buildings, and we're going to buy a Class B apartment building and reposition it and sell it as a Class A building. There's nothing wrong with that, but this is not a niche where very many people invest, and therefore there's just not a lot of talk about it.
Mm-hmm.
So there isn't a lot of herd mentality. The smart money is not going after this niche. So we do have to go through quite an educational process with our investors. But we think the smart ones get it. And, we love it when they invest with us. We've seen other folks that have purchased parks directly themselves once they get it, as to why this is such a good business. But anyway, that's really it. It's been a little more of an effort than I would have thought to raise the capital.
So the fundraising part, yeah, which makes sense. And, I was excited to have you on the show because I get this space and I'm a big fan of overlooked markets. And if we just kind of recap like all the benefits, so you've got a market that doesn't have massively expanding supply. It's got increasing demand, right? I mean,
yes,
the demand for affordable housing is always going to be there. And it's overlooked by other investors and it's secure. I mean, it on my checklist of things that I look at with an investment, it has all of that.
It's got it all.
Yeah. So let's talk about how you got into this and maybe, how, if somebody's looking at this going, I'm new to real estate, I don't have a lot of capital to invest. I'd love to invest with you and get that kind of return, but I like the idea of mobile homes. How could somebody get started in this business?
So there are a couple of different ways. So you've already mentioned John Fedro, and he got started just buying individual houses, fixing them up, and putting them out. I believe he was doing rent-to-own agreements. He might have regular rented. I know another guy who did that as well. He ran up to about 50 individual mobile homes that he invested in. Each of them were cash flowing a couple $100 for him. But he got started with his first home, with very little down. I mean, I think it was $1,000 or something. So if you find the right park owner who maybe just doesn't have time to fix up a house, they might just give you the house for free or let you pay it out over a year or two. You put some sweat equity into it, get the house fixed up, and then rent it out or rent to own it. Now, we think the real value is in owning the land. And my other friend who got up to about 50 homes then switched over to buying mobile home parks, and he now owns 5. Anyway, so that's a good way to get started. Folks can also do what we call land home deals. There are deals out there to be had, or you can create one on your own where you take, say, a quarter of an acre or half acre of land, you improve it, put in a driveway, well, septic, and then you bring on a mobile home and put it on that quarter acre or half acre piece of land. That would be a mobile home park of 1. And you could sell the whole thing, or you could, again, just rent to own the house and continue to own the land, or buy a slightly larger, plot of land. You could probably get, depending on zoning, but you could probably get 4 or 5 houses on, say, half an acre of land. If you can get the zoning. Again, that's kind of the trick in this business is to go from one house on a piece of land to multiple. That's really 2 or more is obviously a mobile home park. But if you could get the zoning, or buy a park that's already, undermanaged but small that way, wouldn't be inconceivable to get a 5-space park for $100,000. Yeah. And, maybe you put down 10, you find the right motivated seller who carries back 90,000. But, again, now you're in the business for 10. If you already got some experience managing and turning around houses, that's usually where a lot of the heavy lifting is. So you buy a deal with some hair on it, you fix some of the houses up, and pretty soon you've got a really nice little 10-space park that's worth a couple $100,000, and maybe you only put down $10,000 and, again, bought it for $100,000.
Yeah.
So,
my business partner is actually doing something pretty interesting. He just bought a lot. It was a single family house, and I think it was like 15 acres that came with it. And he was talking to, I can't remember the name of the company, but I think it's the company that Warren Buffett founded or invested in.
Oh, probably Clayton
Yeah,
Homes.
Yeah, they talked to him about doing something where he would basically subdivide out, several lots, and then they would put homes there for him. Do you know what that whole thing's about?
Yeah, Clayton, through their subsidiary, 21st Mortgage, has a new program called Cash, and it enables park owners to get houses, obviously brand new ones brought in, And they put down, the program's changing a bit, but basically they put down maybe 25%. And so you can then get, again, a brand new house brought in. They will actually carry the paper. They are licensed mortgage originators, so you don't have to be. So they go through all the hoops, all the hoops, all the paperwork to get a mortgage written properly, and you help subsidize that person buying the house. But again, in exchange, you as the park owner, you get a pad filled for a lot less money than if you were to buy the house outright yourself. So we participate in that program right now in our Kansas City park, I believe also our Indiana and Illinois. We're getting signed up for the Illinois park. Anyway, so that's a good one to participate in.
Nice. Yeah, thanks for that. It seems like a great way just to help fill spaces, right?
Yes, because that's kind of the Achilles heel. Frankly, even if you were able to build a park, you would have an improved vacant field. You wouldn't have houses on it yet. So that's something a lot of people kind of overlook. They don't understand that, again, even if you were able to build one, really solving that house financing issue it can be quite a conundrum.
Yeah.
So anyway, I mean, when I got started, that program didn't exist. So I was spending hundreds of thousands of dollars on mobile homes, just paying cash, buying them out of bankruptcies, foreclosures from banks, and bringing them into my park. Usually they were abandoned in the middle of, somebody else's land, and I would bring them in and fix them up, and again, pay for all the fix up myself. So it is easier to bring in a brand new house right off the factory floor. And if you can get financing on it, you can infill your community fast.
Absolutely. Awesome. Well, Jefferson, now it's time for 5 to Thrive. These are 5 questions that can help our listeners through your expertise learn how to create more income or build more wealth. Are you ready?
I'm ready.
All right. Well, I think we kind of answered the first one, but I just want to hit this again. What's one piece of advice that you'd give to somebody who wants to follow in your footsteps and get into mobile homes? Like, again, say they're brand new. Would you suggest going, deal by deal and just learn the business? Or would you say maybe go straight for parks?
I would say go straight for a park. First get educated. We've actually launched our podcast called Mobile Home Park Investors. It's the world's first podcast just dedicated to the mobile home park business. So we're going to be doing a lot of education there. So, and there are other books and seminars and things to go to. So get educated, and then, try and buy the land along with, perhaps some homes. See if you can start small. Again, there are 5-space parks out there. There are 10-space parks. They tend not to be listed with brokers. Small parks tend to go on Craigslist and eBay. So for anybody wanting to start small, I would look those couple places and look to buy a 5 or 10-space park. But try and own the land and fix up houses as needed. Get them sold off so you can get down to just owning a parking lot.
Beautiful. I love it. So are you in the camp that says you should focus all your attention on one thing and master it and build one source of income? Or are you in the other camp that says you need to diversify and have multiple sources of income?
No, I'm more of a focus guy. So this is the only form of real estate that I invest in, and I've got well over half of my net worth, probably closer to 80%, in mobile home parks. I do a very little bit of value investing in the public markets. But again, the overwhelming majority of my wealth and 100% of my time is focused on mobile home parks. So I'm a big fan of focus.
Nice.
Whatever it
is. And find what works and then
whatever you're focusing on, focus. Yeah.
Nice. What is there a book that you would say is required reading for real estate investors or maybe for mobile home park investors specifically?
Yeah. So industry consultant, a guy named George Allen, has done a book called How to Find, Buy, and Manage a Mobile Home Park. So that's good. For real estate generally, I really like reading Robert Kiyosaki's Rich Dad, Poor Dad. So I'd recommend that. I'd also recommend a book called The Millionaire Next Door, which is, covers broadly how folks have made wealth and budgeted and lived within their means and generally focused. And again, how somebody who looks like they live in a rather modest house next door to you might be a multi-millionaire. But anyway, those couple of books I very much enjoyed reading. So I recommend really all three of those.
Nice. Do you have a favorite quote or a mantra that you kind of live your life by?
Not so much on the business side of things. I'm I'm named after Thomas Jefferson, so I love a lot of his quotes. He said that the only truth in newspapers is to be found in the advertising. He's talked about the if I can get it right, the blood of patriots must be refreshed. I'm bumbling that one, but basically, I like a lot of Thomas Jefferson quotes and things that are patriotic.
Nice. Final question: what does true wealth mean to you?
It's probably more about time and flexibility than any particular net worth. I'm blessed to be happily married and with a couple of great young kids, and doing what I do in real estate. It's a very different time requirement. It's just much more flexible than when I was working for some of those startups. Or even before that, when I was working for some larger companies. So for me, it's just, being able to work really wherever I am, wherever my cell phone gets reception. And that gives me the flexibility, again, to spend some time with my family, work when it's good for me, and not have to, punch a clock in and out 9 to 5.
Beautiful. Well, Jefferson, thank you so much for being on the show. I'm sure people got a ton of value from this. And again, guys, we'll link up your podcast. We'll link up your website if anybody's interested in investing in Jefferson's fund, or just learning more about mobile home park investing. And that's just something that I think is really cool because, again, it's an overlooked market. It's secured by real estate, and all the economics just make sense. So, Jefferson, any final words of wisdom or any kind of parting thoughts?
Just love to have folks connect with us either through parkstreetpartners.net or our mobilehomeparkinvestors.net websites. That'll be helpful for folks.
Great. Well, thanks for being on the show.
Thank you, Chris.